investment banking is just like Wolf of Wall Street. You won't have a life. Get a Rolex and have something flashy in the office to show off. Hi, Sydney here, and today I'll be debunking a lot of myths and misconceptions about the investment banking industry. By way of background, I am a second-year analyst at a bulge bracket investment bank in New York City, and after being in the industry for the past year and a half, there are a couple things that I've realized based on questions that people have asked me who are not in the industry, as well as just common portrayals of the industry in, say, media and other things that are not necessarily true, and I want to discuss that, as well as maybe perhaps help other people who are thinking of going into the industry and have painted this picture in their mind of what it's going to be like. You work 80 to 100 hours a week. The answer to this is yes and no. So this really depends on your bank, your group, and just generally tied to the amount of deal flow that you have. The most insane weeks have been in the 100-hour range, and sometimes it's just more of a lax week, and that will be more like 60 hours, especially during the start of the pandemic. There wasn't a lot of activity going on with clients especially, so it tended to range on the lower end, and now things have really been picking up, so it's leaning closer and closer to the 80 to 100 range. So it's pretty safe to say that number around like 70, 80, 90 is typically the average. And then the extremes are around 60 on the low end and 100 hours on the high end. Investment banking is just like Wolf of Wall Street. Maybe it's obvious to some, but I have been asked this question on more than one account. So that's why I decided to address it here. No, not really at all. Someone once asked me to put a percentage on it, and I think it would definitely be in the low single digits. First of all, to clarify, Wolf of Wall Street is about sales and trading and not about investment banking. For those who have a little bit of finance knowledge, we all know that sales and trading and investment bankers don't interact because investment bankers are on the private side and we have access to confidential information. Now, if sales and trading people get access to that information, that could be considered insider trading, which is why that wall is there. Thus, the analogy isn't pointed to the right industry. Building off of that first point, we're not going on yachts, we're not going in helicopters and just partying all around the world. No, it's mainly just you sitting at the office until 2 a.m. Though us bankers do know how to have fun. You won't have a life. You can have a life, it will just be more difficult because your career, you have chosen that to be your number one priority, and a lot of your time will be tied to requests from other people. So it's very hard to kind of put your like social life or your dating life, etc. first. You still can have those things. You still can have a robust social life. You probably won't be able to make it to that 6 p.m. happy hour that your friends are going to, but you can carve out time on the weekends if you have it, or just finding ways to make it work. I think to clarify that statement, you probably have less of a life than your counterparts who are working a 9 to 5, but there are ways to still have a fun social life and to do some of the things that you want. You might just be sacrificing a little bit of your sleep while doing so. Sacrificing the little amount of sleep that you have while doing so. Let's talk about college majors. You have to have majored in finance, economics, or something quantitative in order to get into the industry. This is false. I have people in my class who majored in humanities, liberal arts, and just generally studied something that had nothing to do with finance or anything quantitative. You don't necessarily need this educational background in order to get into the industry. However, during the interviews, just make sure you know, for example, what an investment bank does, be able to walk through some simple accounting and finance questions. And as long as you know enough about the industry and you're well prepared for the interviews and you're able to say your why, like why investment banking when you actually studied art history in college, as long as you're able to answer some of those main questions. A lot of people that I've seen in my class and just friends across the industry come from a variety of different backgrounds, but it does help a little bit when you do have an undergraduate business degree in finance when it comes to studying for the interviews, and sometimes just having a little bit of a head start when you do end up starting on the job. But one of the downsides of being a finance major like myself was when I was going through the interviewing process, I definitely got the hard harder questions, and I definitely got grilled to make sure that I knew, for example, how to calculate free cash flow and the difference between unlevered and levered free cash flow. Those type of questions came up a lot in my interviews versus compared to my other friends. They just really wanted to know more of the why and the behavioral, and sometimes got asked those questions, but they weren't expected to, which was the case for me. Investment banking is a very cutthroat culture. And my answer to that is that it depends. It is known for being very competitive and cutthroat, and the reason for that is because of the compensation and incentive structure. This is an industry where you're ranked against your peers, and that's how you end up getting the dollar amount for your bonus. Additionally, when you make it to a managing director, when you're very senior, you also have to be very competitive against the other banks in order to win business and ultimately get fees for closing those deals. So competitiveness is just part of being in the industry. So kind of going back to a more junior level and incentive and bonus structure, this does tend to lend itself to be more competitive because there's only so many people and you're ranked on a numerical scale. However, it's not like everyone is sabotaging each other all the time. You may have heard pretty insane stories of people deleting each other's files or doing just really, really cruel things to other people in their class just to get ahead, try to get the return offer, get a better bonus. But those situations are typically outliers. From my experience, I have found that my class is super collaborative. If we need help on something, people are just very eager to jump in, and it just creates a very supportive environment to thrive rather than being really afraid that someone is out to get you. In my opinion, it also doesn't do the firm any good because if everyone is helping each other, that only makes everyone better and ultimately makes deliverables higher quality. Everyone actually likes working with each other, so there are no bottlenecks and no friction, or at least less possibility of that. In general, it depends. And I think that was very traditional Wall Street culture, and now it has shifted to become better in terms of culture. And again, it just really depends on the people in your group, how your group is structured. Take that with a grain of salt. Everyone spends their bonuses and money on designer clothes, models and bottles, nice cars and watches, etc. Yes and no. If you want to, go ahead. We are well compensated for those long hours and for the work we do, and people choose how they want to spend their money. I personally am more on the minimalist side. I like to call myself a minimalist with options, so having a few key things that are essential to you, but still having a couple options to choose from. So I really like to put my savings and my bonus into something like the stock market and just investing in things that will have a return for me rather than on depreciating assets such as vehicles or material items. So I would say it's really up to you on how you want to spend it. I do know of people who took their bonus and really splurged and spent it all on something that they really wanted, and it's just all a personal choice. But there really is no pressure like people may think to get that new Hermes belt or get a Rolex and have something flashy in the office to show off. It just doesn't seem like it's necessary to me, and even if people around me were doing that, I personally would just stick to my own. It's more important for me to achieve financial freedom early in my life rather than try to conform to that culture. If it did exist, basically you don't need to if you don't want to. It's your personal choice. There might be more peer pressure in other places depending on how your peers are dressed, but spend it how you want. It is your hard-earned money. Hard-earned money that you've gotten from the long hours in the office when you could have been doing something else. Let's talk a little bit about personality. Everyone in the industry is very type A. This is false. I think people come from many different personalities. Granted, all the traits associated with that type of personality does lend itself pretty naturally to the industry. Being organized, very conscientious, just being very proactive about things are some of the qualities of having a type A personality that would allow someone to be really good at this job. I think people come from different backgrounds, and I know people who are really chill and are still doing really well in the industry, so that isn't necessarily the case. At least for me personally, I wouldn't say my personality is very type A. I think I'm somewhere in between, maybe leaning towards the more type A side. And maybe when you start on the job and you start having a couple years in the industry, you become more and more like type A. I think this is all a little bit arbitrary. As long as you're focused and you're really reliable and you're staying on top of all your projects and your emails, I don't think you have to have a specific personality in order to get into the industry.